Most people think their mortgage is normal. They buy a house, pay monthly, and move on with life. But if you actually add up what you pay over 30 years, you'll realize something disturbing. You didn't buy one house. You paid for almost two. Pause. And the scary part? Nobody hid this from you. Let me be clear before the comments start flying. Mortgages are not scams. Banks are not evil villains. And buying a home is not a mistake. Slow down. The problem is that most people don't understand what they're actually agreeing to. Let's do a simple example. You buy a $350,000 house. You put some money down. You get a 30-year mortgage at about 6.5%. Sounds normal, right? Pause. Over 30 years, you don't pay $350,000. You pay anywhere between $750,000 and $900,000. That's not a typo. That's interest. Here's the part most people don't want to hear. You didn't buy a house. You bought a payment plan. And that payment plan is designed so the bank gets paid first for a very long time. So why doesn't this feel insane? Because no one asks the total cost. They ask one question. Can I afford the monthly payment? That's it. If you can afford this month, next month, and the month after that, the deal looks reasonable. But affordability hides the truth. In the first 10 years of a 30-year mortgage, most of your payment goes to interest, not ownership. You carry the risk. The bank collects the reward. If something goes wrong early, job loss, illness, emergency, you still owe almost everything. Now here's where people get emotional. You've heard it 1,000 times. Renting is throwing money away. That's not always true. Renting buys flexibility. It buys mobility. It buys lower risk. Buying only wins if you stay long enough and understand the game. The real trap isn't mortgages. It's buying the maximum you're approved for. Banks approve based on what you can survive, not what helps you build wealth. Just because you're approved for $500,000 doesn't mean $500,000 is smart. How smart people play it. Smart homeowners do a few things differently. They buy below their limit. They make extra principal payments. They shorten the loan when possible. And most importantly, they understand the total cost, not just the monthly bill. Mortgages aren't evil, but blindly accepting them is expensive. If this video made you rethink money in a way school never taught you, subscribe, because next we're talking about why having two jobs can actually keep you broke.